Hey, we're going to get going here today, and we got a volatile supply-demand report, and really gave a good spark to the bean market with corn following suit. So we're just going to cut to some numbers in here right now. We got this volatility, and we discussed this in our report last week about a market lean heading into this report. In here, you had the bulls kind of leaning more on the corn market and the bears leaning more towards the bean market in here. And then with these numbers in here, you caught a bullish surprise on beans, therefore much more of a spark. Another reason why we had some volatility is heading into this report, there's a pretty tight range in here on both the yield forecast for corn and soybeans. The corn number was hit pretty accurate at 172.5, but looking at that bean number at 50.5, that was well below the average trade estimate of 51.5 and below the lower end of the range. Then adding a little more fuel to the fire, you had both harvested acres for both corn and soybeans declining from the August report. Corn down about 1 million acres, beans down 600,000. All in all, this is really some bullish fodder for the market. Then, though, you move to the end of the report and you look at the ending carryout levels, the USDA still kept this corn carryout just above 1.2 billion bushels, and they did that as they knocked demand down by 300 million, about an equal cut across the board between feed, ethanol, and exports. On the bean side of it, though, they brought that bean ending carryout all the way down to 200 million bushels, and to do that, they had to cut demand by almost 100 million bushels, with most of that coming from exports. This report was supportive, but now what? And we just want to look ahead in here right now on what we think what could occur. First off, on the bean side of it, this is a daily chart. And as you can see with today's trade, we're trying to break out above that 1475 resistance. If we get above there, 15.25, 1550 might be a target. Our bias, there's probably not enough gas in the tank, though, for new contract highs to be made. On this push, we're going to look at making a few more sales. Now I get over to the corn side of it, and this chart looks a little messy here, but what it is, it's a weekly chart going back the last 2 years. And here in 2022, we basically have a range on front month corn between 560 and those highs at 827 set back this past spring. If we look at a retracement target in the middle, it kind of points towards 662 to 725 as a targeted range. Now, this is September corn right now at 721. Deese is behind that, but this is why we're going to look at making some sales on Deese corn here in the 7 to 7.25 range. We think as we move into the fall of the year, Deese corn could easily trade the 660 to 720 range. Looking at KC wheat, KC wheat is starting to break out. It looks like our seasonal lows are in place. Where can we move towards? Our target is 985 on KC wheat. There's really nothing for this report in here right now, but the near-term trend has turned higher. Maybe a move up into the 10.25 to 1030 area, but that's our targeted place to make some sales. The one thing we always go back towards when we get these numbers, and the U.S. acreage and yield and our ending carryout was the bullish jolt in here today, but it helps to take a step back and look at world carryout. Here are the carryout figures in the last 4 years, and as you can see with corn, and we have all these figures in billions of bushels, our carryout this year is about the average of the range over the previous 4 years. We had a low carryout of 11.5 billion bushels in 2021, and last year is a high end at 12.3 billion bushels. Now it's going to get back under 12 billion. This carryout figure on corn isn't really bullish $7 plus corn. We need to keep that in mind. On the bean side of it, yes, we got a bullish report in here, but when you look at the carryout range over the last couple of years, from a low of 3.3 billion to almost 3.7 billion 2 years ago, our carryout at 3.6, just above there right now, is at the higher end of the range. So yes, this bean report offers us some near-term support, but long-term, we're not going to run out of soybeans. And if there's a demand concern, that could show up on the bean market in here as well. This is the reason why we want to look at pushing along some sales on beans on this push. The wheat one probably has a bullish story because we continue to get a decline in ending carryout levels. Okay, but again, though, in wheat, so much has to do with the Russia situation. As we want to wrap up here with today's webinar, yes, it looks like we're breaking out, but we question really how much upside we can see on both corn and soybeans. We think it's important to make some cash sales in here on this rally. We think the other thing to acknowledge is there's really no carry in this market. So moving grain for harvest, even December, January delivery, it's probably much more advantageous than moving it out for next spring or going into next summer. We've stuck with this bias that we don't think there's as much downside in the fall of the year as the biggest bears. But on the other hand, we don't think there's as much upside as the biggest bulls do this winter. We think the bullishness could be getting priced in right now. We also want to look to 2023. Our game plan is to price out in here in the fall and early winter. We see the biggest downside risk in this market in the April to June timeframe if there's no crop issues in South America. Fairly normal weather in South America can lead to a downturn a little bit earlier in the year than what most would expect. We'll be back again here tomorrow with a quick webinar. Again, we want to just cover here the supply demand report. We'll make some more updates on our report this afternoon. Thanks for tuning in.